Hi friends, I hope you are all doing good. In this video, we will be discussing about the amendment which has happened in the topic of input tax credit. This video is exclusively for the amendments which has happened in the topic of input tax credit. Very good and very important amendments have happened in this topic. So let us straight away start the amendments without wasting our time. First amendment which has happened, or first a new rule has been introduced. There was already a rule, new sub rule has been introduced. There was already a rule called as rule number 36. In that, and sub rule 4 has been introduced for restricting the amount of input tax credit which can be taken by a registered person. What does it say? This rule says restriction on availment of input tax credit in respect of invoices or debit notes which are in respect of what, sir? In respect of invoices and debit notes which are not uploaded by the supplier in GSTR 1. See, normally, as we all know, section 16 subsection 2 talks about conditions for claiming input tax credit. There are totally 4 conditions for claiming input tax credit. One of the condition is that the registered person should have the possession of tax invoice or any other tax paying document. Now this any other tax paying document, what are this any other tax paying document, is given in rule number 36. Rule number 36 gives the different types of document which a registered person should have for claiming the input tax credit. Such documents are, say, he should have a tax invoice, or he should have a debit note, or he should have a RCM invoice, he should have a bill of entry in case he is importing the goods, he should have a ISD invoice if the input tax credit is with regard to input service distributor, etc. Now what they have done is, with effect from 9th of October 2019, not this October, last year October, they have added a new sub rule number 4. What sub rule, sir? Sub rule number, that is rule 36 sub rule 4 they have added, which is telling that the ITC which I am going to give you, though all the conditions are satisfied, the ITC which I am going to give you will be restricted. The ITC will which I am giving you will be restricted to whatever input tax or whatever invoice has been uploaded by the supplier in GSTR 1. Along with that, you can take extra 10%. Along with that, you can take extra 10%. So there is a restriction of input tax credit on the purchaser, on the person who, on the registered person who is making the purchases. Sir, I didn't understand this, sir. See, normally, how does it work? Say there is Priya Saris. Now, Priya Saris has purchased. So, Priya Saris has purchased goods from, say, Pothys. Priya Saris has purchased goods from Pothys, Chennai. Goods worth rupees 10 lakh was purchased by Priya Saris from Pothys, Chennai. Now, what will this Pothys, Chennai do? Pothys, Chennai will upload this invoice of 10 lakh rupees, assuming 10% is the GST rate. So 1 lakh is the GST amount. What Pothys has to do? Pothys has to file the return. They have to file the return called as GSTR 1. GSTR 1 is the return which you are filing for your outward supply. So once Pothys files their return GSTR 1, this invoice details will come to my login details, my GST portal. It will come to my login of GST portal in form GSTR 2A. These details, invoice details, will come to my portal in form GSTR 2A. This 2A is going to tell, see Mr. Dilip, you had made a purchases from Pothys worth rupees 10 lakh. Is it true? Yes, it is true. So it is an auto-populated details of all the purchases which is made by me. Now, only those purchases will be reflected in GSTR 2A. Only those purchases will be reflected in GSTR 2A which have been uploaded by the supplier. The person who is supplying goods to us, if he has uploaded that invoice, only then that invoice details will come in GSTR 2A. If he has not uploaded, sir, it will not come. If he has not uploaded, sir, that invoice details will not come in GSTR 2A. Now, because he has uploaded, it has come. Now, Section 16 subsection 2, which talks about conditions for taking input tax credit, says you should be in possession of tax invoice, you should have actually received the goods or services, then the supplier should have paid the taxes and the recipient should have filed the return, that is the registered person should have filed the return. Now all these four conditions are satisfied, along with this, these four conditions, this invoice should also get reflected in GST at 2A. Sir, what if it is not getting reflected in GST at 2A? If it is not getting reflected in GST at 2A, then whatever details are getting reflected, whatever invoice details are getting reflected, that plus 10% extra credit can be taken by you. Assuming there were total 10 purchases which was made by me in the month of October. I made 10 purchases from different people. I made 10 purchases from different people. The input tax credit with regard to these 10 purchases was around of rupees 1 lakh. I made total 10 purchases from different people. All the invoice together gives me an input tax of 1 lakh rupees. Now, out of these 10 people from whom I made the purchases, two of the supplier did not upload or did not file their GSTR1. If they are not filing their GSTR1, that means they are not uploading the invoice details. They have not uploaded the invoice details. Now, because they have not uploaded the invoice details, because these persons have not uploaded the invoice details, that invoice will not come and reflect in my GSTR 2A. It will not come and reflect in my GSTR 2A. Now, assuming these two invoices which were not uploaded had a total input tax credit equal to 50,000. I had made how many purchases? Totally 10 purchases I had made. What was the total input tax credit of these 10 purchases? 1 lakh rupees. Out of these, two persons have not uploaded the return. The two people who have not uploaded the return, what is the input tax credit with regard to those invoices? It is 50,000 rupees. It is 50,000 rupees. Now, what the law is telling is, see Dilip, 50,000, okay, I'll make it 40,000 so that you don't get confused. It is 40,000 rupees. So what is the law telling? See Dilip, 60,000 worth ITC worth invoices are uploaded. 60,000 worth ITC of invoices are already uploaded on your GST portal. The 40,000 is not uploaded. Now the 40,000 which is not uploaded, though all the conditions in section 16 subsection 2 are satisfied, you have the invoice copy, you have received the goods, the supplier has paid the taxes, you have filed the return, though all those conditions are satisfied, I will not give you entire 40,000 rupees credit. I will not give you entire 40,000 rupees credit. How much will you give, sir? How much will you give? If you are not giving me 40,000, what input tax credit will you give? I will give you 10% of whatever is already uploaded. I will give you what? 10% of whatever is already uploaded. Now 10% of what is already uploaded is how much? 6,000. Therefore, in the month of October, for October month, what is the total input tax credit which can be taken by me? Sir, you can take total input tax of 60,000 which is uploaded by the supplier plus 6,000 of which is not uploaded by the supplier. 6,000 of what? Which is not uploaded by the supplier. So total input tax credit which I can take in the month of October is 66,000. 66,000. Sir, oh sir, I have one more question, sir. Oh sir, I have one more question, sir. What is your question? Sir, I am not taking input tax credit worth rupees 34,000, sir. In the month of October, though I have received the goods, though the invoice is there with me, though I have the documentary evidences, etc., I am not taking the input tax credit worth rupees 34,000, sir. What will happen to this credit? When will I be able to take this credit? What the law is telling? See, Mr. Dilip, this credit will be eligible to be taken by you if these suppliers are uploading invoices, or say 34,000 is the total credit which is eligible by you. Now 34,000 is the total credit which is eligible by you. 34,000, just a second, 34,000 divided by 1.1, 110% or 1.1, which gives me 30,909. If invoices worth rupees 30,909 are uploaded, if invoices worth rupees 30,909 are uploaded, you will be able to take the ITC of 34,000. Sir, what nonsense are you talking? How will be I able to take input tax credit of 34,000 when invoices only of 30,909 will be uploaded? Ayo, see, if 30,909 rupees invoices are uploaded, if these invoices are uploaded, you can take 10% extra, no? Yes, sir. 10% extra, 10% of this will be what? 1. 30,909 plus 10% will be 3,091 rupees. So what is the total? The total is 34,000. Okay. So when the invoices worth 30,909, that is 110%, 1/10 of 34,000. If 1/10 of the 34,000 invoices are uploaded, then you can take the input tax credit. So this is what is the restriction. This is what is the restriction which has been given. Meaning, I'll just read the main crux over here, and I have also given an example which you can see. As per this sub rule 4, which is the new sub rule which has been introduced, as per the sub rule 4 of rule 3, ITC to be availed by a registered person in respect of invoices or debit note, the details of which have not been uploaded by the supplier in GSTR1, the details of which have not been uploaded by the supplier in GSTR1 cannot exceed 10% of the eligible input tax credit available in respect of the invoices or debit notes, the details of which have been uploaded. So if there are any invoices, the details of which have not been uploaded by you, then you can take input tax credit with respect to those unuploaded invoices, those not uploaded invoices, only to the extent of 10% of what is already uploaded. 10% of what is already uploaded. Now the limit was 20% before, now it is reduced to 10%. So with effect from 1st of January 2020, the limit is 20%. This is an important amendment. Question can be asked on this. Now, so in summary, if we want to give this case where invoice or debit note has been uploaded by the supplier, how much input tax credit can you take? If it has been uploaded, then you can take full input tax credit of whatever is uploaded. What if the invoices or debit note have not been uploaded, sir? If the invoices or debit note has not been uploaded, then you can take input tax credit worth 10% of eligible ITC in respect of documents or invoices which has already been uploaded. You can take how much, sir? 10% of what is already uploaded. 10% of what is already uploaded. I hope this point is very clear to you all. I have given an example. The same example which I had taken. In the example, I told 10 lakh rupees. Here it is 1 lakh rupees. Here it is 10 lakh rupees. So here Mr. Dilip, a registered person, receives 100 invoices involving GST of total 10 lakh rupees from the different suppliers, etc. You can just go through this example. Okay. So when can he take the credit worth rupees 34,000, or here it is 3.4 lakhs. It is when they are uploading 3.091 lakh worth invoices. Then second, now the above restriction we understood, sir. There is a restriction rule which has been given. Now they are telling there are few issues which people have got with this rule, new sub rule which has been introduced. We are giving the clarification for those issues. They are giving the clarification for those issues. Sir, what was, say, one of the clarification is about, sir, this 10% of whatever is uploaded and whatever is not uploaded, etc. This calculation who should do? Is it we as a registered person should do, or the system will automatically do? Is it we, the registered person, who has to do this calculation, or the system will automatically do the calculation and give us the final answer? They are telling, see sir, system will not do anything. You will have to do. System will not do anything. You will have to do the calculation. So whatever details of input tax credit you are taking should be on self-assessment basis. Common portal is not going to do anything. Common portal is not going to do anything. And then the restriction, they says the restriction shall be applied only on the invoices or debit notes, the details of which are required to be uploaded by the supplier under section 37 subsection 1, meaning only those invoices, the details of which are required to be uploaded in GSTR 1, only those invoices, the details of which are required to be uploaded by the supplier in GSTR 1 should be taken into consideration when you are computing 10%, etc. Sir, what do you mean by this, sir? See, when you are importing goods from outside India, when you are importing services, etc., that person who is selling the goods from outside India will not upload anything. Why? He is not registered in India. He is selling the goods from somewhere outside India. How will he know what is the law in India? Therefore, in that case, that person will not upload. Can I take input tax credit? Yes, you can take input tax credit. If it is import of goods, take input tax credit with the help of bill of entry. Similarly, if you are paying the tax under reverse charge mechanism, if you are paying the tax under reverse charge mechanism, the supplier will not upload the details. The supplier, say some supplier who are not registered, he is supplying exclusively non-exempt supplies, so he is not getting registered under GST. If he is not getting registered under GST, why will he upload the details? Because he is not uploading, it will not reflect only. Because it is not reflecting, does it mean that you cannot take input tax credit? No, 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 no. They are telling, see, in case of RCM, what happens? The recipient has to pay the GST. Who is the recipient over here? I, being the registered person who has made the purchases, is the recipient. Because you are the person who made the inward supply, you are called as recipient. In case of RCM, you only have to pay the tax to the government. Have you paid the tax to the government? Yes, sir, I have paid the tax to the government. Take the credit also. Law is telling what? Have you paid the tax to the government? Yes, sir, I have paid the tax to the government. Take the input tax credit also. So they are telling, therefore, taxpayer can avail full input tax credit in respect of IGST which is paid on imports, documents issued under reverse charge mechanism, credit received from input service distributor, etc. Because these are the people who are not going to upload the details in GSTR 1. And further, sir, oh sir, the restriction which you are telling, no sir, is this restriction because you are telling 10% of whatever is already uploaded. So should I take it supplier wise or should it be total? It is total basis. It is not on supplier wise. Say I have purchased from 10 different person. Is it only for that one person who has not uploaded? No, 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 no. See total of whoever, total number of invoices which is already uploaded by the different types of supplier. Out of that, take 10% extra. Take 10% extra. It is not supplier wise. The ITC under rule 36 sub rule 4 shall be calculated on total eligible input tax credit from all the supplier against all the suppliers whose details have been uploaded by the supplier. Therefore, the restriction is not supplier basis. The restriction is not on supplier basis. Then the calculation would be based only on those invoices on which ITC is available. Therefore, okay, what is this point telling? See, whenever you are calculating this 10%, assuming totally 10 invoices, you had made 10 purchases. So, okay, assuming totally 12 purchases you have made in the month. Out of these 12 purchases, 4 supplier did not upload the invoice. You have how many invoices for this month? Totally 12 invoices I have. 4 people did not upload. So, total 12 invoices which I have has an input tax of 1,20,000. 1,20,000. Out of this, 4 people did not upload. How much was the input tax credit, sir? The people who did not upload, the input tax credit which with respect to those invoices was 30,000 rupees. And out of these 12 invoices, 2 suppliers or 2 invoices which I have, the credit amounting to rupees 10,000, the credit amounting to rupees 10,000, this 2 invoices are blocked under 17(5), meaning on these 2 invoices I cannot take input tax credit also. Why, sir? Because they are blocked under section 17(5). They are blocked under section 17(5). So now How many people have uploaded, sir? Totally 6 people have uploaded. 6 suppliers have uploaded. And what is the total ITC worth of the invoices which is already uploaded? It is 80,000, sir. It is 80,000. Now, when I am taking the invoices which has been uploaded, see, 4 people have not uploaded. Sorry, it is not 6 people. 4 people have not uploaded the invoices at all. How many have uploaded, sir? 8 supplier have uploaded. What is the total input tax credit with respect to these 8 suppliers? Sir, it is 90,000. However, in this, sir, eligible ITC is 80,000 and ineligible or blocked credit is 10,000. Therefore, for calculating the 10%, should I take 90,000 or 80,000, sir? They are telling you should take 80,000 and not 90,000. Meaning what, sir? While calculating that 10% extra which you are taking, you should take the invoices or the input tax which is eligible for you. You should take only the input tax which is eligible for you. On the input tax which is eligible for you, take 10%, that is 8,000 extra you can take. Totally 88,000 is the input tax credit which can be taken in this present case. I hope this point is clear. I'll read it for you. The calculation would be based on only those invoices on which ITC is available. Only those invoices on which ITC is available. Therefore, invoices on which ITC is not available, say it is blocked under section 17 subsection 5, would not be considered for calculation 10% of eligible input tax credit. If any invoice is blocked under section 17 subsection 5, I will not consider that for the purpose of calculation of that 10%. And last point, the amount of ITC in respect of the invoice or debit note whose details have not been uploaded shall not exceed 10% of eligible input tax credit in respect of details which has already been uploaded as on the due date of filing GST R1 by the supplier of the tax period. The same can be assessed. Okay, how will I get these details, sir? How will I get this detail? They are telling you will get this detail in your GST R1. If the supplier has already uploaded his GST R1, you will get the details automatically in your GST R2A. It will be auto populated in your GST R2A. Then they have introduced one more rule, rule number 86. This rule is not for a taxpayer, it is not for a registered person, it is concerned with the department. What is this rule telling? See, the commissioner has the power. The commissioner has the power to restrict the amount of input tax credit which can be taken by you. What is this telling, sir? The commissioner has the full power to restrict the input tax credit which can be taken by a registered person. How can he do so? We'll see. A new rule, rule 86A has been inserted in CGST rule to empower the commissioner or an officer who is authorized by such commissioner to impose restriction. The commissioner can impose restriction on utilization of input tax credit in electronic credit ledger if he has reason to believe that such input tax credit is fraudulently availed by you or it is ineligible. What is this point telling? If the commissioner feels that you have done some mistake, there is some input tax credit which is there in your electronic credit ledger. There is a huge amount of input tax credit which is there in your electronic credit ledger, and the officer is feeling that this input tax credit is something which is ineligible. This input tax credit is something which you have taken fraudulently, etc. Then he can restrict you from taking the input tax credit. He can stop you. He can tell, no Dilip, you cannot take this input tax credit. He can restrict you from taking the input tax credit. Sir, when can he impose such kind of restriction? The restriction can be imposed in the following circumstances. In these following cases, the restriction can be imposed by the commissioner or person authorized by him. ITC has been availed on the basis of tax invoice or valid documents issued by a non-existing supplier. I have taken input tax credit on the basis of invoice which is issued by a supplier who is not there at all. or I have taken input tax credit based on an invoice without receiving any goods, without receipt of goods, without actual receipt of goods, I have taken input tax credit based on the invoice. Then I have taken input tax credit based on the invoice, the tax in relation to which has not been paid to the government. I have taken based on the invoice, I have taken the input tax credit, but the supplier has not made the payment of tax to the government. Then also they have the power to restrict. They are telling, please sir, I know you have the invoice, I know you have the documentary proof with you, but he has not uploaded. That supplier is not there at all. He has not uploaded the invoice. That supplier is not there at all. That supplier has not paid the taxes to the government. So I don't want you to take input tax credit. I don't want you to take input tax credit. Then this is case number 1. Case number 2, the registered person who is availing input tax credit has found non-existing or is not conducting any business from registered place of business. Case number 2 are telling the person who is taking input tax credit, the person who is taking input tax credit is not there at all. He is not there at all. There is just a registration, but there is no person who is doing business, or the place where he has registered, he is not there. At that place, that person's, say for example, Priya Saris is registered in Jayanagar, 3rd block. Now the officer is coming and visiting Priya Saris in Jayanagar 3rd block. He is seeing over there and nothing he is finding. He is finding a garbage in front of him. In that case, he can restrict us from taking input tax credit. Then registered person availing input tax credit is not in possession of tax invoice. And further, case number 3 when he can make restriction is when I am taking input tax credit even when I don't have the tax invoice available with me. I am taking input tax credit when I don't have tax invoice or any other valid document with me. Okay. Now, sir, he is putting restriction on me. He is putting a restriction that I cannot take input tax credit. How long he can put that restriction, sir? How long can he put that restriction? He can put that restriction up to a period of 1 year. Up to a period of 1 year. Once he puts that restriction should be is valid only up to a period of 1 year. During such period, meaning that restriction period, I will not be allowed to take input tax credit for making the payment of outward supply, and I will not be eligible for taking any refund also of that restricted input tax credit. This restriction can be imposed only for a period up to 1 year. Then very important, very important amendment, Rule 43. Rule 43 is what, sir? Oh sir, Rule 43 is what? Rule 43 talks about apportionment of input tax credit with regard to capital goods. If you have capital goods which is used for business purpose, which is used for other than business purpose, which is used for commonly for taxable and non-taxable purpose, how will I apportion that input tax credit? They are talking about section 17(1) and 17(2). 17(1) and 17(2) talks about what? If you have input tax credit which is used partly for taxable supplies and partly for exempt supplies, then take input tax credit proportionately. Then if you have input tax credit which is used for business purpose and non-business purpose, take input tax credit proportionately. That is what this particular rule is talking about. Okay, what is this rule telling? There are few beautiful changes which has made our life simpler. Okay, there were few clarifications which were supposed to be given. There was a lot of garbage which was dumped in this particular rule. They have removed all those garbage, but still there are few things which has to be rectified by them, which they have not rectified. Maybe in future when they find, yeah, this is also not useful, that time maybe they will remove it. There was, seriously I'm telling, there was a lot of misassumption about this particular rule. People never knew how to do calculation. Now it has become a little simpler. Now it has actually become a little simpler. Rule number 43. Okay, I hope the screen is properly visible. Okay, now it is visible. Subject to the provisions of, subject to what, sir? Subject to the provisions of section 16 subsection 3. What is section 16 subsection 3 telling? Section 16 subsection 3 says if you are taking depreciation on capital goods, if you are taking depreciation under Income Tax Act on a capital goods, you cannot take input tax credit on such capital goods. You cannot take input tax credit on such capital goods. Subject to the provision means if you have not taken depreciation on tax component, if you have not taken depreciation on tax component of a capital goods under Income Tax Act, then please follow this particular sub rule. What is this telling? The input tax credit in respect of a capital goods which is being partly used for the business purpose and partly used for other purpose, or which is used partly for effecting taxable supplies, which includes zero rated supply, and partly for effecting exempt supplies. So if you have any capital goods which is used partly for the purpose of business and partly for other purpose, which is used partly for the purpose of taxable supplies and partly for exempt supplies, then in those scenarios the ITC shall be attributable to business purpose or for taxable purpose in following manner. The amount of ITC which you can take, which is required to be given for business purpose or which is required to be attributable to business purpose or taxable purpose, should be determined in following manner. Understand each and every point carefully. Very beautiful rule, very confusing rule. Okay, one by one we'll see. Now, point number 1 says what? Clause A is telling, Rule 43 sub rule 1 clause A says, input tax credit in respect of capital goods exclusively used for non-business purpose or exclusively used for effecting exempt supplies. If it is exclusively means what, sir? Exclusively means it is only used for non-business purpose or it is only used for exempt purpose. What is only used? If you have a capital goods which is only used for exempt purpose or which is only used for non-business purpose, then such input tax credit should be indicated by you in GSTR 3B or GSTR 2. GSTR 2 is not there, therefore GSTR 3B, and ITC shall not be taken. The ITC in respect of those invoices or those capital goods shall not be credited to electronic credit ledger. So, if you have an input tax credit, with regard to any capital goods, the details of which has not been if you have any input tax credit with respect to a capital goods which is used exclusively for exempt supplies or non-business purpose supplies, then no input tax credit can be taken. Sir, not even 1 rupee, sir, not even 1 rupee. Straight away, entire amount should be gone. Then, second clause says, Clause B, the ITC in respect of capital goods used for effecting supplies other than exempt supplies. If you have any capital goods with you which is used for making supplies other than exempt supplies, meaning what, sir? They are talking about taxable supplies, zero rated supplies, etc. They are talking about taxable supplies. In short, the ITC with regard to capital goods which is used exclusively for, I will call it as taxable supplies, shall be indicated in GSTR 2 or GSTR 3B, and the ITC shall be credited to electronic credit ledger. The ITC shall be credited to electronic credit ledger. You can take the input tax credit with regard to those invoices. So if it is exclusively for non-exempt purpose or taxable purpose or business purpose, then full ITC will be given. Full ITC can be taken. Sir, full amount today only I can take. Yes, full amount of ITC can be taken by you today only. Then, point number 3. Clause 3 says, Clause 3 says the ITC of capital goods not covered above. The ITC of capital goods which is not covered above andre clause A or clause B, which is not exclusively for exempt supplies, which is not exclusively for taxable supplies, meaning it is used for both exempt purpose and taxable purpose. So if you have any input tax credit of a capital goods which is commonly used for both taxable and exempt purpose, it shall be denoted by A. The ITC which is commonly used for both taxable and exempt purpose shall be denoted by A, being the amount of tax which is reflected on the invoice. Whatever ITC is there in the invoice shall be denoted by A, and it shall be credited to the electronic credit ledger. That ITC shall be credited to the electronic credit ledger, and the validity of the useful life of such capital goods shall be taken to be 5 years from the date of invoice. What is clause C telling? If you have any capital goods, which you are using for both taxable and exempt supplies, if you have any capital goods which is used for what, sir? Both taxable and exempt supply, take the input tax credit with regard to those invoices. Take the input tax credit with regard to those invoices. What input tax credit should I take? Whatever the tax is mentioned in the invoice, you take the input tax credit. And for those capital goods, the life shall be treated as 5 years. The useful life shall be extended up to 5 years. Sir, in my business, I have a practice of treating the life only to be 2 years. Okay, not a problem. But the life can be extended up to 5 years. Up to 5 years, or the useful life of such type of capital goods can be extended up to 5 years. In GST, normally a capital goods will have a life of 5 years. In your business, you may be using that capital goods from last 10 years. It does not matter. But in GST, after 5 years, it is of no use. Now, before reading any provisos, I will read the main main clauses. Before reading the provisos, provided further that, why sir you are doing like that? Because when you read the main clauses, you will understand the concept as a whole. Because once you start reading the proviso will tell something which you are not understanding only. What are you telling, sir? Proviso will tell, see, provisos are overriding the main laws. Whenever a proviso is given for a section or a rule, etc., that proviso will have power when compared to that clause. So better that powerful person we will ignore for time being, and we will see what is there. Other things, okay? First we understood, if it is exclusively for exempt, I can never take. If it is exclusively for taxable, I can take fully. If it is for both taxable and exempt, take it fully now. And the life of that asset shall be 5 years. Then clause D says the aggregate amount of A. What is A, sir? Common credit. The total common credits which you have, the different assets which you have bought, which are used commonly for different purpose, the aggregate amounts of A shall be, which is credited to electronic credit ledger under clause C in respect of common capital goods whose useful life is still remaining for the tax period, whose useful life is still there for this current tax period, shall be denoted by TC. Meaning, if you have any capital goods which you had purchased 2 years back, 2 years back, if you have purchased 5 years is the life, that means it is still there. I have purchased a capital goods today, that means it is still there, life is still there. I have purchased some capital goods 7 years back, life is not there. Why? Only 5 years life is given in GST. So what is this telling? You take the aggregate amount of A, you take A of all the different types of common, you take the common credit of all the different types of common capital goods, and the total of those common capital goods shall be denoted by TC. So what is TC? TC is A1 plus A2 plus A3, meaning if you have 3 capital goods which is commonly used for taxable and exempt supply, individually their credit will be called as A1, A2, A3. Collectively they will be called as TC. Collectively they will be called as TC. We will ignore the proviso for time being. Then what is it telling? The ITC attributable to a tax period on common capital goods during their useful life shall be denoted by TM which is equal to TM divided by TC by 60. Why sir 60 sir? See, 5 years is the life of an asset. So because you are filing the returns under GST monthly, credit also is required to be taken by you on monthly basis. Reversal also is required to be done by you on monthly basis. So let the useful life be, let the denominator over here is 60. How sir 60? 5 years into 12 months is equal to 60 months. So what is this point telling? For this particular month, you understood what is the total common credit. By taking all the different types of common capital goods, you found a credit. You understood the total common credit TC is equal to what? Now, for this month, what is the credit? For one particular month, not for this month, for one particular month, what is the common credit? What is the amount of common credit for one particular month? That shall be denoted by TM. TM is what? Common credit for 1 month is equal to TC divided by 60. 60 sir, because the life of capital asset is 60 or 5 years. Now there was this clause F which they have removed. There was this clause F which they have removed. Very good. Now they are telling clause G which is there existing. See, whatever is given in green has been amended. Then clause G says common credit attributed towards exempted supplies shall be denoted by TE. Whatever common credit which you are required to apportion for attribute to exempt supply shall be denoted by TE, and that shall be equal to what sir? T shall be equal to TM. TM. Why sir TR you have written? Because in the main rule they have not made the changes. See, F told about TR, but F is only gone now. When F is only gone, why TR will be there? So it is TM into E by F. What is TM sir? TM is the common credit for 1 month. Common credit for 1 month. What is E by E sir? Value of exempt supply or value exempt turnover of that month. Turnover in a state. What is E sir? Is the aggregate value of exempt supplies made during that tax period, during a particular tax period. And what is the F sir? It is the total turnover. See, exempt turnover is only exempt supplies. Total means all exempt, non-exempt, non-business supplies, etc. F is the total turnover in the state of the registered person during the tax period. Even the exempt supply should be taken in that particular state, whatever is the exempt supply. That will give us the apportionment. We'll see the provisions, etc. later. Then they are telling the amount of TE along with interest during the tax period for its useful life of concerned capital goods shall be added to output tax credit. You will have to reverse the input, that input tax credit with regard to the exempt supply which is attributable to exempt supply. How should I do the reversal? You do the reversal by adding it to the output tax liability. See, reversal is how you either reduce or you add it to payment. You either reduce from input or add it to the payment. So they are telling you add it to the payment. And then finally, the amount of T shall be computed separately. You should compute this T separately for CGST, SGST, IGST, etc. Now, by whatever we have read, see, I have given a beautiful example. We'll see this example, very important. So I am going very slow for this particular provision. Now, whatever main clauses we have studied, no, I'll just give a simple example to understand the main clauses. Once you have understood the main clauses, we'll go into some difficulty level. Once the stage 1 is cleared, next stage will go. And then finally, we'll find the queen. We are playing the game Mario. Okay, now there is a company called as Priya Provision Store. There is a company called as Priya's Provision Store. Now this Priya Provision Store is supplying both taxable as well as exempt. It is making both taxable as well as exempt supply. It is supplying taxable goods also. It is supplying exempt goods also. It is making both taxable and exempt supplies. Now, for simplicity, we'll take taxable supplies which Priya Provision Store is making is Maggi. So Priya Provision Store is supplying Maggi, which is a taxable supply, and Priya Provision Store is supplying X, which is an exempt supply, So there is this Priya Provision Store. What this Priya Provision Store has done is it has purchased an capital goods which we are required to purchase. It has purchased a shelf. It has purchased a shelf where it is keeping all these Maggis. It has purchased a shelf where it is keeping all this Maggi. This shelf is used only exclusively for Maggi. Means what, sir? It is used exclusively for making taxable supplies. It is used exclusively for making taxable supplies. Now, for the X, it has purchased egg tray plus a refrigerator. It has purchased a refrigerator where it is going to keep this X, and it has also purchased egg tray where it can keep all these different X, where it can keep all these different X. This is a capital goods. They are treating it as a capital goods. They are treating it as a capital goods. This capital goods is exclusively used for what, sir? X. That means it is exclusively used for what, sir? Exempt supplies. These are the capital goods which are used exclusively for exempt supplies. So I have capital goods 1. I'll call shelf as capital goods 1. I'll call this egg tray plus refrigerator as capital goods 2. And then apart from this, Priya Provision Store also has purchased, Priya Provision Store has also purchased a Tata Ace for delivering Maggi and X. For the purpose of delivering Maggi and X to different location, it has purchased a vehicle. Sir, can they take input tax credit, sir? Motor vehicle is ineligible. No, sir. See, sir, motor vehicle, if it is used for transportation of goods, you can take a full input tax credit. So therefore, yes, they can take input tax credit. Now this, I will call it as capital goods number 3. The capital goods number 3 is used commonly for both taxable as well as exempt supplies. They are used for both taxable as well as exempt supplies. Now, assuming capital goods number 1, the ITC, the tax component, the GST on that is 10,000. There is capital goods number 2, the GST on that is 15,000, and there is this capital goods number 3, the GST on that is 60,000. The GST on this common capital goods is 60,000. Okay, sir. Now, what is clause number 1 telling? So this is the question. What is clause number 1 telling? Clause 1 is telling if you are exclusively using for exempt supplies, then don't take input tax credit. If you are exclusively using for exempt supply, the egg shelf, first is not first is exclusively for taxable supplies. So this capital goods number 1, which is shelf for keeping Maggi tray, it is exclusively for what purpose, sir? Taxable purpose. If it is exclusively for taxable purpose, clause B is telling if you are exclusively using it for other than exempt supply, that is taxable, that ITC can be taken by you. It can be credited to electronic credit ledger. So if it is exclusively for taxable, take full ITC. So I can take input tax credit worth rupees 10,000. If it is exclusively for exempt supply, sir, no ITC, fully disallowed, no ITC at all. Therefore, ignore it. You cannot take input tax credit. You cannot take input tax credit. Now, if it is commonly used, so this is the amount which you are going to put in your electronic credit ledger, the amount by which your electronic credit ledger is getting credited with. So 10,000 completely of this, and no input tax credit with regard to this exclusively for exempt supplies. And what is commonly used for both taxable and exempt supplies, for that, what is the clause number C telling? Clause C is telling if there is an ITC ITC on capital goods not covered above. ITC on what? Capital goods not covered above, that is common capital goods, being the amount which is indicated in the invoice, shall be credited to the electronic credit ledger. That ITC you take now. Whatever common capital goods you have purchased, whatever is the input tax credit with respect to that common capital goods, you take the full input tax credit now. You take the full input tax credit now and make its useful life to be 5 years. Make it useful life to be 5 years. So with regard to capital goods number 3, can I take input tax credit, sir, with regard to capital goods number 3? Yes, take full ITC. Yes, take full ITC. How much, sir? 60,000 rupees. So tell me, what is the total amount by which my electronic credit ledger will be credited with? What is the total amount of input tax with which can be taken by me for this month, which can be credited to my electronic credit ledger? Sir, it is 70,000. It is 70,000. Sir, what about clause D, F, E? Will come. Next is clause number D. What is clause D telling? The aggregate amount of A credited to electronic credit ledger under clause C in respect of common capital goods whose useful life is still there shall be denoted by TC. Now, in our case, we have only one common capital goods. If you had more than one common capital goods, add the credits of all those common capital goods. Add the credit of all those common capital goods. In the present case, because we have only one, so the credit of common capital goods is denoted by A. One common capital goods is denoted by A. In our case, we have only one common capital goods. Therefore, TC, which is total of all the common capital goods, will be equal to A in our case, because we have only one, will be equal to 60,000 rupees. Will be equal to 60,000 rupees. What is this? Total common credit or total ITC on common capital goods. Total ITC on the common capital goods. Okay, sir. After this, what should I do? After this, you go to point number E. What is point number E telling? Point E is telling ITC which is attributable to a tax period for 1 month. What is that ITC of common capital goods? What is the amount of ITC of common capital goods for 1 month? That shall be denoted by TM. What is the amount of ITC of common capital goods for 1 month? That shall be denoted by TM, and that shall be equal to TM is equal to TC, total common capital goods, divided by 60. So next I should find, see, this is for full life. Okay, this is for the entire useful life. Now I should find for 1 month how much is the common capital goods. So that is denoted by TM, which will be equal to TC divided by 60, which will be equal to 60,000 divided by 60, which is equal to 0 cancel, 6 ones are 6,000. So 1,000 rupees is the common credit or credit on common capital goods. That is the 1,000. That is 1,000 rupees in our case, in this example. Now, out of this 1,000, next is point number F is removed. So point number G, out of this 1,000, what is towards exempt supply? That you tell me. What is towards exempt supply? That you tell me. Now, assuming the total sales made by me, taxable sales made by me is 600 and exempt sales made by me is 400. I sold goods worth rupees 400 lakhs of exempt supplies and 600 lakhs rupees in lakhs. 600, 400 is very less. So rupees in lakhs. I sold goods worth rupees 600 lakhs of taxable and 400 lakhs of exempt. So what is my total supplies, total turnover? Total turnover is how much, sir? Total turnover will be equal to 1,000 lakhs. Total turnover is how much? 1,000 lakhs. Now point number F is not there. Straight away point number G. Sir, should I write point number E, F, G in your examination? No. I'm just writing so that you match this with clauses directly. You can match it with the clauses directly. So what is clause G sir, it will be TE, that is the amount of common credit attributable to exempt supply shall be equal to TM into E divided by F, which is equal to common credit for 1 month into E exempt supply of this month divided by total supply of this month. Exempt supply of this month divided by total supply of this month, which will be equal to 400 rupees. Which will be equal to what sir? 400 rupees. So this rupees 400 is the common credit attributable to exempt supply. It is attributable to exempt supply. Sir, what should I do with this common credit, sir? This common credit which is attributable to exempt supply, that you add it in your output tax liability. Whenever you are adding it in your output tax liability, add it along with interest. This is the basic overview of the main clauses of rule number 43 sub rule 1. This is the basic overview of main clauses of rule number 43 sub rule 1. So total amount which will be credited in my electronic credit ledger is 70,000, and the reversal which I am going to make in this month is 400. The reversal which I am going to make in this month is 400 rupees. 400. Sir, will this 400 be same for the next month also? See, we cannot say whether the amount will be same for next month also, because next month my exempt supply may be 500 lakhs, and my total supply may be 100 lakhs. My total supply may be say 1000 lakhs, and my exempt supply may be 500 lakhs. So in this case, I'll multiply what? 1000 into 500 divided by 1000, which is equal to 500 lakhs. So next month I may have to reverse only 500. Next month I may have to reverse only 500. So it depends on E by F which you get every month. So they'll still stay point E. The stage is simple. The rules are the procedure which you have to follow is same. But point number F, the amount which is attributable to exempt supply, which will change, it may change for every month. It may change. Sir, my question is, what if for this month I don't have the details of E by F, I don't have the details of exempt supply or total supply? Even in that case, should I reverse, sir? Yes, even in that case you should reverse. How will I calculate? In that case, take E by F of last month. If last month also not there, then last month. If last month is also not there, then last month. That is something you should keep on going back and doing it. Okay, so this is the basic overview. Now we'll read the provisos which are there. Next stage we'll go. Now I am not reading clause number 1 and clause number 2 because we already know it. Clause number 1 and clause number 2 talks about what, sir? Clause number 1 talks about exclusively for exempt supplies. Clause number 2 talks about exclusively for exclusively for taxable supplies. For easy understanding, I am just telling taxable and exempt supplies. I am not using the word exclusively used for non-business and exempt supplies. I am not telling the word exclusively used for other than exempt supplies. For easy understanding, I am using the word exclusively used for taxable and exclusively for exempt. Now clause C tells what? The ITC, the common credit, shall be denoted by A, and you take the full input tax credit now, and the life of that asset shall be 5 years. Next, provided that proviso, proviso, provided that where any capital goods earlier covered in clause A, where any capital goods was earlier exclusively used for exempt supplies, if it was exclusively used for exempt supplies, is subsequently covered under this clause. Now it is becoming what? Common. There was a capital goods which was used only for making exempt supply. Now it is used for making both exempt and taxable supplies. That is commonly used. Then the input tax credit with respect to such capital goods shall be denoted by A, and it shall be credited to the electronic credit ledger. Then whatever ITC is there with regard to that asset, whatever ITC is there with regard to that asset, you denote it by A and take the full input tax credit. Now, sir, oh sir, you are talking about the asset which was used exclusively for non-business, exclusively for exempt purpose, correct? When you would have purchased the asset, assuming I purchased the asset 2 years back, and at the time when I purchased that asset, it was used only for the purpose of making exempt supply. It was used only for the purpose of making exempt supply. Now, when I purchased it 2 years back, did I take input tax credit? No, sir. Why did I take input tax credit? Sir, because you were not eligible at all, sir. Correct. Because I was not eligible to take input tax credit, I have not taken the input tax credit with regard to that particular invoice, that particular capital goods. Now, because it is used commonly for both the purpose, take the full input tax credit today. Oh, ho, ho, ho. Take the full input tax credit today. Yes, take the full input tax credit today. Then, subject to a condition, you can take the full input tax credit today. Sir, it is used for 2 years. No, sir. No depreciation for 2 years. Sir, wait, Sundara, wait, Sundari, wait, Sundara, wait, Sundari. For the 2 years, you take full input tax credit today. Not a problem. Take full input tax credit today. But for the 2 years, no, for the 2 years, you were not eligible to take credit. Why? Because it is used for exempt supply. That you reverse off. That you reverse off. How should I do? By adding it in your output tax supply. How? Who is telling this? Second proviso is telling this. Second point, the proviso is continuing. The proviso is telling, subject to the condition that ineligible credit attributable to the period during which such capital goods were covered under clause A exclusively for exempt supplies shall be denoted by TIE, shall be denoted by TIE and shall be calculated at 5% for every quarter or part thereof and shall be added to output tax liability. Oh, ho, ho, ho. Sir, what and all you told, sir, we didn't understand any of those points, sir. Whatever you told, we didn't understand, sir. What is it telling? If there was an asset which was exclusively used for exempt supply, now it is commonly used for both exempt and taxable supply, take the full input tax credit now. Now for this period from here to here, when it was used when it was used only for exempt supply, input tax credit which is there now you are taking full no. For this period, the ITC which you had, which was attributable for this particular period, reverse it off. Why, sir? Because you are taking full input tax credit, now reverse it off. I'll repeat. I had purchased an input tax credit in year 1. In year 3, this input tax credit is now becoming common capital goods. At the time when I purchased, it was exclusively for exempt supplies. For this 2 years period, now what is this proviso telling? Take the full input tax credit today. Take what, sir? Take full input tax credit today. The asset was purchased 2 years back, I know, but take full input tax credit today and reverse the ITC for this 2 years. Reverse the ITC for this 2 years. How will I reverse the ITC for this 2 years? Reduce it by 5% per quarter or part thereof. Reduce the ITC, whatever ITC you have, reduce it by 5% every quarter. Even if it is a part of quarter, you should take it to be an entire quarter. Even if it is a part of quarter, treat it to be entire quarter. Then what is it telling? Provided further that the amount of TIE shall be computed separately for central CGST, SGST, IGST, etc. And explanation they have given: an item of capital goods declared in clause A on its receipt shall not attract the provisions of section 18 subsection 4 if it is subsequently covered under this clause. Section 18 subsection 4 talks about input tax credit in respect to asset, or whenever there is a say if you are supplying any goods, if there is a change, say if the goods were first exempt and now they are becoming taxable, then in such cases what will happen? I would have not taken input tax credit at the time of purchase of those goods. Now at the time when I am selling these goods, I have to pay the taxes, so I can take input tax credit proportionately. So what is this point telling? If you are following the above rule and taking proportionate input tax credit. Don't follow 18.3. See, I am giving you credit here also. You want credit there also. No. You either follow rule 43 or follow 18.4. For the capital goods, you either follow rule 43 or section 18 subsection 4. Anyways, that is an explanation, simple explanation. Then for this clause D we had studied. Clause D, I'll read it again. The aggregate of the amount of A shall be credited to the electronic credit ledger and shall be denoted by TC. The total different capital goods, say capital goods 1, 2, 3, which is commonly used. There are 3 capital goods which is commonly used for taxable and exempt supplies. Add the total credit of those common capital goods, that shall be denoted by TC. That shall be denoted by TC. Now there is a proviso, beautiful proviso. Again, one more proviso. Provided that, provided what? Provided that where any capital goods earlier covered in clause B, earlier covered in clause B means it was exclusively for taxable supplies. If there is a capital goods which was exclusively used for taxable supplies, are subsequently covered under clause C. They are subsequently covered under clause C, meaning they are now used for commonly for taxable as well as exempt supplies. Then the ITC claimed in respect of such capital goods shall be added to arrive at the aggregate of TC. So whenever you are finding this TC, then you add that amount also, which was earlier covered under taxable supplies. You would have already taken input tax credit, but now it is commonly used. See sir, I had purchased an asset. Okay, I had purchased an asset which was exclusively for taxable purpose. Today it is used common for both taxable and exempt supply. When I purchased the asset, I would have taken full input tax credit. Yes sir, you would have taken full input tax credit. Now because it is commonly used, you will have to proportionately reverse whatever is attributable to exempt supply. Yes, so therefore please consider that asset for computation of TC. Please consider the input tax credit with regard to that asset for computation of TC. They are telling very simple point. We'll see. There is an example which is given, beautiful example. You will understand all the provisions beautifully. Then the common credit which is attributable for 1 month shall be denoted by TM, and it shall be equal to TC divided by 60. For removal of debt, it is clarified that the useful life of any capital goods shall be considered to be 5 years from the date of invoice. Whatever the invoice date is there, from that date 5 years will be the useful life. 5 years will be the useful life, and the said formula shall be applied or shall be applicable during the useful life of such capital goods. And then find TE, that is amount attributable to common exempt supply, which will be equal to TM. T is equal to TM into E divided by F. It will be equal to TM into E divided by F. What is E, what is F is given, and a provisos for this is given. They are telling while calculating this E by F, do not include the tax excise duty, do not include central excise duty, special excise duty, central sales tax or value added tax. Don't include the different types of taxes which was there pre-GST regime for calculating that E by F. Then next, the total TE which is there, which is the common capital goods which is attributable to exempt supply, that should be reversed. How sir? By adding it to the output tax liability along with interest, and this is required to be done separately for CGST, SGST and IGST. Now there is this one question. I'll erase this whatever I had written and we'll take up this question. Beautiful question, very beautiful question. At the same time, very simple question. You will understand the entire provisions properly once you solve this question. Once this question is done, what is this question telling? Priya Provision Store is engaged in supply of taxable as well as exempted goods. Below is the details of capital goods purchased by Priya Provision Store. These are the different capital goods which was purchased by Priya Provision Store. It purchased a capital goods. Okay, so details which are given is capital goods, input tax for that capital goods, what is the month of purchase of that capital goods, and what is the use of that capital goods. So P, capital goods was purchased for input tax is 60,000. It was purchased in the month of October 2020. This month, sorry, today's date is 1st of November. So it was purchased in October 2020, and it is used exclusively for exempt supplies. Because it is used exclusively for exempt supply, tell me, can I take input tax credit? No ITC available. Okay, then I have purchased a capital asset called as Q. ITC with regard to that capital asset is input tax is 1,50,000. This was also purchased in the month of October, and this is exclusively used for taxable supplies. Because it is used exclusively for taxable supplies, tell me, can I take input tax credit? Yes sir, you can take full input tax credit. You can take full input tax credit. Then there is capital goods R. ITC is 90,000, purchased in the month of October. This is October 2020. This is commonly used for making both taxable and exempt supply. This is commonly used for making both taxable and exempt supply. Here what should I do? What should I do in this case? Sir, in this case, take full ITC, sir. Take full ITC now and proportionately reverse by finding T. Proportionately find what is the credit attributable to exempt supply and reverse the same. What is the credit attributable for exempt supply and reverse the same. Then there is capital goods S, which is ITC is 2,40,000, purchased in February 2020. Purchased in when? February 2018. Sorry, February 2018. It was exclusively used for exempt supply till September 2020, till last month, till September 2020. It was used for what? Exclusively for exempt supplies. It was used only for exempt supplies. Thereafter used for both exempt and taxable supplies. Now it is used commonly for both exempt and taxable supply. With regard to this asset, what will I do, sir? See sir, at the time when I purchased, it was for exempt supply. Because it was for exempt supply when I purchased it, I would have not taken input tax credit. I would have not taken input tax credit. Now it is used for both exempt and taxable supplies. What is the proviso telling? If there is an asset which is used exclusively for exempt supply, now it is becoming a common capital goods. Now it is becoming a common capital goods. Then take the full input tax credit. Take the full input tax credit now and reverse the ITC which is attributable for that period. Reverse the ITC which is attributable for that period for which it was used for exempt supplies. How will I reverse? By adding it to output tax liability. So what will I do in this case? Take full input tax credit, reverse for exempt period. I am writing the words exempt period, reverse. What does it mean, sir? Reverse ITC related to, in respect of exempt period. Reverse the ITC which for which this asset was used for exempt supply, exclusively for exempt supplies. Reverse the ITC. And lastly, I have a capital goods T. The ITC is 1,80,000, purchased in July 2018. July 2018, and it was exclusively used for taxable supplies. When I purchased it, it was exclusively used for taxable supplies till September 2020. Thereafter, it is used for taxable as well as exempt supply. Meaning now it is commonly used for both taxable and exempt supply. What is happening in this case? I purchased this asset. When I purchased this asset, it was used exclusively for taxable supplies. It was used only for taxable supplies. Now it is commonly used. Now when I purchased this asset, I would have taken full input tax credit. I would have taken full input tax credit at the time of purchase. Should I take the input tax credit now? No ITC now. No ITC should be taken by you now. But reversal for T is to be done. but you will have to reverse the input tax credit which is attributable to exempt supply from today. From today, you will have to reverse the input tax credit which is attributable for exempt supply. It was already used for 27 months, 33 months. It will be used for both exempts and taxable supplies. For the 33 months, reverse whatever is used for exempt supply. Now, the turnover of exempt supplies and taxable supplies is 200 lakhs and 400 lakhs respectively. So exempt supply is 200 lakhs, taxable supplies is 400 lakhs. Determine the amount of input tax credit to be reversed in the month of October 2020. Now they are asking only what is the input tax which you are required to reverse in the month of August 2020, but we'll do the entire problem. See, I have given the summary answer already to you. I have already given the summary answer over here. What is the summary answer? For the capital goods P, which was purchased this month, used exclusively for exempt supply, I cannot take any input tax credit. For capital goods Q, which is used exclusively for taxable supplies, I can take full input tax credit now only. For capital goods R, which is purchased in this month, which is used commonly for taxable as well as exempt supplies, I will take full input tax credit now. Take full input tax credit now and proportionately reverse whatever is attributable to exempt supplies. And for capital goods yes, which was purchased in February 2018, which was used when purchased, it was used exclusively for exempt, now it is used commonly. So what will I do? I will take full input tax credit now and reverse for that period for which it was used for exempt supplies. And last, capital goods T, which was purchased in 2018, used for taxable supplies only, now it is commonly used. When I would have purchased this, I would have taken full input tax credit. So should I take any input tax credit now? No sir. Now we will have to do only the reversal. So now I am solving this problem. Solve in the similar manner in examination, you will be able to get full marks. But you will have to write the notes, okay? Write the notes. Now, what are the different things which you have to do in this question? First, point number 1. Computation of input tax credit, input tax to be credited to electronic credit ledger. First, what are we doing? We are finding the input tax which is required to be credited to electronic credit ledger. What is the input tax which is required to be credited to electronic credit ledger? Particulars, note, rupees. See, you just take a printout of this question and straight away, okay, we'll see there are totally 4 capital goods P. Capital goods P. This capital goods P is what? Exclusively used for exempt supply. Because it is exclusively used for exempt supply, can I take input tax credit? No input tax available. No ITC is available to you. Why no ITC is available? Because of rule 43 sub rule 1 clause A. Therefore, in that rupees column dash. Capital goods Q. Capital goods Q, it is exclusively used for taxable supplies. Second capital goods is exclusively used for taxable supplies. So what will I do? I will take full input tax credit available. Why sir full input tax credit available? Write 43 clause 43 sub rule 1 clause B. If it is exclusively used for other than exempt supply, take full input tax credit now. So what is the input tax credit attributable to that asset? 1,50,000. So I'll take full input tax credit. Clause C, point number C, capital goods R I have purchased. I have purchased one more capital goods R. This is common capital goods. This is purchased in this month only and it is used commonly for both. For this, what will I do? I'll take full input tax credit now. See, I have written the notes over there only. I will take full input tax credit now and I will have to reverse whatever is attributable to exempt supply. That we will do separately. Note number 3, what will you write? That clause C, 43(1)(c). So I will take full input tax credit now. What is the input tax credit with regard to R? 90,000 rupees, sir. Please take a printout of this amendment sheet and then solve the problem. You will enjoy it. Then capital goods number D, capital goods yes. This capital goods yes is what, sir? This was used exclusively for exempt. Now common. Now it is commonly used for taxable and exempt supply. What will I do? I will take full input tax credit now. I'll take full input tax credit now and then reverse for T. Similarly, I'll reverse for T. Who is telling this, sir? This is told by Proviso to rule number 43 sub rule 1 clause C. So write note number 4. As per Proviso to rule number 43 sub rule 1 clause C, I can take full input tax credit now. What is the amount of input tax? 2,40,000. 2,40,000. We are only seeing what is the amount which is required to be credited to electronic credit ledger. What is required to be reversed is the next step which we are going to do. Then capital goods number PQRST used exclusively for taxable supplies. Now for common purpose, what will I do? I will have to reverse it. Should I take input tax credit now? No. Should I take input tax credit now? No. I should use only for reversal purpose. So what is the total input tax credit credited to electronic credit ledger? What is the total ITC which is credited to electronic credit ledger? Sir, it is 1.590 plus 2.4, it is 4,80,000, sir. It is how much? 4,80,000. So what is this? Computation of input tax credit credited to electronic credit ledger. This is point number 1. Please write the notes also. Notes will only carry marks. So I'll just give 1 minute, not 1 minute, just you can take a screenshot or you can pause the video to copy this answer. Then working number 2. What is second working, sir? Computation of common credit to be apportioned. Please ignore my spelling mistake. To exempt supply. What is the common capital credit? Computation of common credit on capital goods which is required to be apportioned for exempt supplies. Again, particulars. There are 3 capital goods which are commonly used. Capital goods R, capital goods S, and capital goods T. These are the capital goods which are commonly used. Now, presentation is very important in examination. And also write a point for note. Here, point number 1. Input tax credit on common capital goods. What is the input tax credit on common capital goods? Sir, there are 3 capital goods which are used for common purpose: 90,000, 240 and 180. Correct. 90,000 for R, 2,40,000 for S, and 1,80,000 for T. Now these individually they are called as A, collectively they are called as TC. Individually they are called as A, collectively they are called as TC. Then now I will find what is the common credit of capital goods which is for one tax period. For 1 month, how much is it attributable to? So ITC attributable for a tax period. What is this, sir? This is TM. TM is how much? Sir, TM is equal to TC divided by 60. TM is equal to what, sir? TC divided by 60. So what you should do, sir? 90,000 divided by 60, 2,40,000 divided by 60, 1,80,000 divided by 60, 90,000 divided by 60,500, sir. For 1 month it is 1,500, 4,000 and 3,000, 4,000 and 3,000. Now this is for 1 month. Now what is for exempt supply? What is the common credit attributable for exempt supply for this month? ITC on common capital goods attributable for exempt supply for the month of October 2020 is, how will I calculate this, sir? This is nothing but TE is equal to TM into E by F, where what is TM? TM is 1,500, 4,000 and 3,000. E is how much? Where E is equal to 200 and F is equal to 600. How, sir? At the end we have given exempt supplies is 200, taxable supplies is 400, so total supply is 600. So what is this amount which is coming to? Sir, here I should do, sir, TE 1,500 divided by 200, exempt supply by total supply, 4,000 into exempt supply divided by total supply, 3,000 into exempt supply divided by total supply. What is the amount, sir? 500, 133, 3.33 and 1,000 and 1,000. This is the ITC which is required to be reversed by you. How will you reverse this ITC? By adding it to output tax liability. So what is the ITC which is attributable for exempt supply? ITC on common capital goods attributable to exempt supply. Sir, what is this CCG, sir? Common capital goods. Now last working which you have to do is, you remember one asset we had one asset which was exclusively for exempt supply. Now it is for both taxable and exempt supply. At the time of purchase of that asset, I would have not taken input tax credit. Now I am taking full input tax credit for the period from which it was used, for exempt supply. I should reverse the input tax credit. So calculation of input tax credit to be added to output tax liability, that is, I am calculating TIE, that is ITC on capital goods used exclusively for exempt supply. Now commonly used. Now it is commonly used for both taxable as well as exempt supply. What should I do, sir? Which is that asset? Capital goods. Yes, sir. What is the total input tax credit? 2,40,000. Now what have they told? You should reduce it by 5% per quarter and part thereof. When was that asset purchased? Sir, that asset was purchased in the month of February 2018 till September 2020, till September 2020, end of the September 2020, because our month is what? October. So till that date you should calculate the number of quarters. Sir, February 18 it was purchased, sir. So Feb to March 18, quarter number 1. April to June 18, one more. Then July to August, September, October to December. So this is in the year of 2018. How many quarters? 4 quarters. And full year of 2019, how many quarters? Again 4 quarters. And 2020 how much, sir? Sir, Jan to March, April to June, July to September, and now it is the month of October. So entire, okay, so July to September, and now it is October, so October to December, 4 quarters. So how much it is coming? 4 plus 4 plus 4, 12 quarters it is coming, 12 quarters. So how will I do? 2,40,000 into 12 quarter. Per quarter how much is it? 5%. Per quarter how much is it? 5%. Sir, why have you taken till end of October, sir? Why have you taken October month also, sir? Now they are telling in the month of October it was used for common purpose. When was it used? First day, last day, we don't know. So we are assuming that by at the end of the month it was converted for both taxable as well as common, because for the month of October we are going to file the return in the month of November. At the time when we are filing the return, that time only we'll make this adjustment. So we have taken this particular it to be 12 quarters. You can take it 11 quarters also, but you should write that assumption. If you are writing 12 quarters or 11 quarters, not a problem. Write an assumption. Write an assumption. Very simple. Write an assumption. So if you are taking 12 quarters, the amount which you should reverse comes to, which you should add it in your output tax liability is 1,44,000. 1,44,000. So total amount which you are required to add in your output tax liability is how much, sir? It is 144 plus 500 plus 1333 plus 1000 rupees plus 1000 rupees. So this completes this question. This completes this question. Very important question. Very important question. Please try to solve it by yourself once again. Now, there is one more clarification given. So that completes our rule number 43. One more clarification given. Clarification in respect of apportionment of input tax credit in case of business reorganization or business reconstitution under section 18 subsection 3. Do you know there is something called as section 18 subsection 3, which says if there is a change in constitution of business, the input tax credit which was there with the transferor can be taken by the transferee. That input tax credit which was there with the old company can be taken by the new company if the change in constitution of business is with exclusive, if the asset and also the liabilities with exclusive provision of transfer of liability. Even if the liabilities are transferred, then the new person can take full input tax credit. So this is the provision of rule number. So there are few clarifications which they have given. They have given few clarifications. Sir, how should the credit be given to the new company? Based on your asset. Whatever asset has been transferred, based on the asset which is transferred, you should take. Normally we were doing it before, it was done based on the turnover. Now it is not based on the turnover, based on the asset which is transferred. Please calculate the common capital, that amount of ITC which is required to be assessed to the new company. The section and their rule have been given just for your reading purpose. Section 18 subsection 3 of CGST Act provides that where there is a change in constitution of business of a registered person on account of sale, merger, demerger, amalgamation, lease, transfer of business, the change in constitution can be sale, merger, demerger with the specific provision for transfer of liability. The change, the amalgamation which is happening, demerger which is happening should also result in transfer of liabilities also to the said registered person, to the new person. In such case, the said registered person shall be allowed to transfer the input tax credit which remains unutilized in the electronic credit ledger. So whatever ITC is there in my electronic credit ledger of the transferee company, old company, can be transferred to such sold company or new company, merged company, demerged company, amalgamated or leased or transferred business in such manner as may be prescribed. What is the manner? Manner is prescribed in rule number 41. Rule number 41 of CGST rules requires the registered person to furnish the details of sale, merger, demerger, etc. in form GST ITC 02. That person who is demerging the business, who is amalgamating the business, has to furnish this GST ITC 02 with the request of transfer of and during that time only he should also tell that, sir, I want to transfer my unutilized input tax credit lying in my electronic credit ledger. However, in case of demerger, the ITC shall be apportioned in the value of the ITC shall be apportioned in the value of asset. Sir, if it is an amalgamation, when it is an amalgamation, you are taking the entire business. When it is a sale, entire business is going. So you transfer full amount. But when it is an demerger, two different firms are going to be there. So based on the asset, value of asset of the new companies which is given by you to the new company, the ITC is required to be transferred. Sir, what is the value of asset, sir? Value of asset means the value of entire asset of the business, whether ITC on the same is available or not. It does not matter whether you have taken input tax credit on that asset or not. Whatever is there on your asset side of balance sheet, that is your value of full asset. What is the clarification given, sir? CBIC has clarified that, beautiful clarification they have given. This is just, if you read this, you will get to know. So just we'll have one reading, and we'll be in this video, it is only input tax credit. I'll upload one more video, the last video, which will cover the other amendments. Okay, CBIC has clarified the following issues relating to apportionment of input tax credit for business reorganization under ... For the purpose of apportionment of input tax credit pursuant to demerger under Rule 41 Sub-Rule 1, the value of asset of new units is to be taken at state level. Whenever you are taking the value of asset, you should take it on state level, at the level of distinct person, and not at India level. Say, you may have business at 10 different locations, I don't care. Demerger can happen in one state. So take that particular state only. The transferor would be required to file form GST ITC 02 only for those states where the transferor and the transferee are registered. You don't see, you may have 10 different locations of state, you may be doing business from 10 different states, I don't care. Where is the demerger happened? In that state only you apply this rule. Don't apply for entire India. Example, sir. By example, you will understand the provision. A company XYZ is registered in 2 states, Madhya Pradesh, Uttar Pradesh. Its total value of asset is worth rupees 100 crores, while its asset, so total asset of XYZ means of entire India is 100 crores. The value of asset in the state of MP is 60 crores and UP it is 40 crores respectively. It demergers a part of its business to company ABC. It is demerging, and the new company which is taking its business is ABC. As a part of such demerger, the asset of XYZ amounting to 30 crores are transferred to ABC in the state of Madhya Pradesh, while asset amounting to 10 crores have been transferred to ABC in the state of Uttar Pradesh. So at the time of this demerger, total asset which was transferred is how much? 40 crores worth asset has been transferred. 40 crores worth asset has been transferred. Out of this 40 crores, 30 crores is from the state of Madhya Pradesh and 10 crores is from the state of Uttar Pradesh. Therefore, the total asset transferred is 40 crores at India level is transferred by X Limited to A Limited. Now, whenever you are transferring this asset, how will I transfer input tax credit? The unutilized input tax credit, they have given the unutilized input tax credit. The unutilized input tax credit of XYZ in state MP shall be transferred to ABC in the ratio of value of asset in the state of MP. So, what is the total asset of what is the asset of MP which is transferred divided by total asset of MP? Total asset of MP, total asset which it had in Madhya Pradesh is 60, and the asset of Madhya Pradesh which is transferred by it is 30. Therefore, 50% transfer it has given. So, while transferring the ITC, unutilized input tax credit, transfer 50%, and it should not on the basis of the value of asset, that is 40 divided by 100. It is not based on the total asset which is given. Okay, it is not based on 40 by 100, it is state wise. In this state, what is the total asset you have, what is that is transferred. Similarly, in case of UP, it is 10 by 40. Now, this formula, should I use only for demerger? No. For every kind of reorganization or reconstitution of business. The formula of apportionment of input tax credit as prescribed under Rule 41 Sub-Rule 1 of CGST rules shall be applicable for all forms of business reorganization that results in partial transfer of business asset along with liabilities, not just for demerger. So if there is any form of transfer of business wherein you are not transferring the entire business, if there is any form of transfer of business wherein only there is a partial transfer, where only a part of business is transferred, in such cases please apply this proviso, this particular clarification you can apply. The ratio of value of asset as prescribed in proviso to Rule 41 Sub-Rule 1 shall be applied to the total amount of unutilized input tax credit. That is, whenever you are assigning this ratio, you should apply to the total input tax credit which you have. You can have input tax for CGST, SGST, ITGST, UTGST, combine all the input tax credit and then find the value and then find this value. The said formula need not be applied separately for each head of IGST. You don't have to do this for CGST separately, SGST separately, IGST separately. Further, the said formula shall also be applicable for apportionment of cess between, even if you have cess, GST compensation cess, you can apportion that also. Example they have given. The ITC balance of transferor A in the state of Maharashtra under CGST, SGST, IGST is 5 lakh, 5 lakh and 10 lakh. Mr. A is transferring his business. He has total ITC in the state of Maharashtra of CGST is 5 lakh, SGST is 5 lakh and IGST is 5 lakh. Pursuant to the scheme of demerger, A transfers 60% of its asset to B. Now he is transferring 60% of his asset to B. Now does it mean that out of this IGST of 5 lakh, CGST of 5 lakhs, SGST of 5 lakhs and IGST of 10 lakhs, he should transfer 60% of 5 lakhs, 60% of 5 lakhs in case of SGST and 60% of 10 lakhs. Should he do individually? No, not a problem, not like that. You can take it collectively. Collectively you have 20 lakhs into 60% you do. You have 20 lakhs now into 60%. 2 6 are 12 lakhs is the ITC which you are required to transfer. 12 lakh is the ITC which you are required to transfer. Now you transfer 5 lakhs of CGST, 5 lakh of SGST, 2 lakh of IGST, or you transfer 3 lakh SGST, 3 lakh 3 lakh CGST, 3 lakh SGST and 6 lakh IGST, or you transfer 2 lakh and 8 lakh, whatever proportion you want to transfer, you transfer, but make sure you transfer only 12 lakh rupees. At the end, you should transfer whatever is totally attributable to him. Whatever is totally attributable to him, only that amount is required to be transferred by you. Accordingly, the amount of input tax to be transferred from A to B shall be 60% of 12 lakhs, total of CGST, SGST, 60% of 20 lakhs, that is total of CGST, SGST and IGST, which is equal to 12 lakh rupees. Now, sir, while transferring, should it be that same head I should do? No. Sir, should the transfer happen that CGST only I can transfer, SGST only I can transfer? No. You find the total and from the total in any proportion you can transfer. The total amount of ITC to be transferred to the transferee, that is sum of CGST, SGST, IGST, UTGST, shall not exceed the total amount of ITC to be transferred. So it should not exceed this 12 lakh rupees. Whatever proportion you want to transfer, you transfer, but it should not exceed the actual amount which you are required to transfer, the total amount transferred as determined in Rule 41 Sub Rule 1. However, the transferor shall have the liberty to determine the amount to be transferred under each head, IGST, CGST and SGST. The person who is transferring the business has full liberty to determine what is the IGST, what is the CGST and what is the SGST he wants to transfer within this total, subject to the ITC balance available in the transfer in that head. So this example I have given, in the state of Delhi, there was a transfer which was made wherein 70% of the asset was transferred. This person has a credit of CGST, SGST and IGST. The ITC which the transferor had was 10 lakh, 10 lakh and 30 lakhs. So total ITC which he had was 50 lakhs. Now how much business is he transferring? 70%. So how much ITC can he transfer? 50 lakhs into 70%, that is 35 lakhs. The 35 lakhs you can transfer in any proportion. He has transferred 10 lakh, 10 lakh and 15 lakhs. He has transferred 10 lakh and 15 lakhs in form GST ITC 02. Whatever is balance left over will belong to the transferor. One more example I have given wherein the way I have transferred, I have interchanged the way it is transferred, which you can just have a look into. Then the apportioned formula shall be applied to ITC balance of the transferor available in electronic credit ledger on the date of filing GST ITC 02. On the date when you are filing GST ITC 02, on that date, what is the credit available in electronic credit ledger? For that, you should apply this particular formula. And further, For the purpose of apportionment of input tax credit in Rule 41 sub Rule 1, the ratio of value of asset shall be taken as on the date of demerger. So what ratio, that asset ratio 70%, 40% which I am taking, as on what date should I take? Is that also on the date when I am filing GST ITC 02? No. That ratio you should take as on the date of transfer of your business, on the date when the demerger is actually happening. Okay, that completes your ITC topic. Registration is the next. I'll make a separate video for other topics. Now, I hope you have understood. If any doubt you have, you can please send me a message. You can send the photo of that doubt and message me on 96-2002-2004. I hope you are enjoying these videos. Thank you.